All right, guys. So, welcome back. We're back now, and this time we're not stopping. So, I've been away for a while, guys, because I've had quite a few things to do. I've been really busy. All right, but I want to go back to doing live sessions, and this time I'm going to spend the time to not stop and keep it consistent. Now, I see that I do have a few more subscribers, so welcome, guys, to all of you new ones that have come along. And this time I'm going to make sure I deliver all the content I'm supposed to do. All right, so I'm gonna not waste any time. It's been a while, so I'm gonna do an analysis of all the major pairs. Now, my idea right now is, unless you guys specify, I'm only gonna look at major pairs because the dollar index is an additional intra-market analysis that we can have. And that analysis gives us the ability to be able to push forward and have more data to work with in terms of analyzing. Okay. Now, the idea here is when we do analysis, the more data you have for your hypothesis, the better your result is going to be. And this is exactly what I want to do. So for me, what I think is best to do here is let's start off with looking at the different major pairs that we have. And if there's any correlation between them, we'll look at the dollar index to see how we can put that in stone and set up positions. Now, it doesn't mean now in the last couple of weeks, I haven't traded that much, hardly, because I've been using the algorithm that I've made some videos about to trade instead because I've been so busy. I can't even look at the charts properly, even though it's right in front of me. It's right in front of me, but my mind can't concentrate. That's just the truth. So what I'm gonna do, I'm gonna start off with all the pairs that I've got going on. Let me start off with Pound USD. All right, let's start off from the weekly. So from the weekly time frame, I would say the first thing that is interesting to me is just this demand order block here. So as you hear me talk about, so we have a induction here. The price has taken the low of the previous week, but with the wick of the candle, so potential reversal there. And we have a what I would call a weekly stop on south. Now, since the price has done that, looking at the daily time frame, the price isn't so pretty, but we do have a strong long, which I believe has come from news. So on the H4, let's take a look here. So on the H4, the price action that we have here is that we have this is a sell order aggregate. So we have an aggregate of sell orders, which the market has purposefully allowed to aggregate here. And you can see that now that the price is pushing long, is wiping out almost all of the positions that were made from this sell. Now, my suspicion is that I know that to me, the way that the market works, the price is going to take the high of this previous week. And then we're going to see how much directionality we get next from the price. And when I say directionality, I mean if we're going to get a trend or the price is going to stay in a range in that sense. Now, above every high and low, we know that there's above every high and below every low, we have sell stop orders, buy stop orders, an array of liquidity in essence. So for me, seeing the price go above these highs right here, I would like to see how the market reacts. So I probably won't even trade this today. I don't think there's any point of trying to jump on the bandwagon. I guess if you want to scalp it and you're very confident, then maybe you can go for a few pips up here, but I'm not even going to bother to do that. So with pound USD, looking at it at the moment, it seems that the dollar is losing strength, but we'll see, looking at the dollar index, how true that really is. All right. Next, I've got Euro USD. So I actually have them down here just to save on time. So Euro USD, looking at the price action, is very similar to Pound USD. We have the price taking a weekly low last week, and then in this week, the price has started to shoot up for a long. Now, over here, I have what I call a validation point that the price is approaching. And on the left here, there's the difference between Pound USD and Euro USD. We have this demand order block, which was responsible for pushing the price all the way up to where it pushed it last year. Price has come back again here. And if you notice on the second leg, we don't have as much liquidity relative to the first movement. So the first movement, as soon as the price got into this order block, gave us 4,242 points. So that would be 424 pips, or a bit more than that, actually. Let's actually get this nice and accurate. So here is 4,417 pips. 417. The second time the price dipped into this area, we had 274 pips. If you round it, 275. So that means that the buy side liquidity that being produced from this demand order block is starting to lessen. And 2 weeks ago, we see the prices close beneath this area. So anytime you see this pattern where the first time price pushed for a long, then the second time it pushed the same area, but we had a smaller leg of movement, it means that this order block is soon going to be not respected anymore and price is going to break beneath. So right now, even though pound USD, Euro USD is pushing long, I'm still suspicious that the price may turn midweek and just go the other way. Okay, we have lots of lows here from last year that are very nice and easy for the price to take in this huge liquidity void down here. But we'll see anyway. So at the moment, this is what Euro USD is doing. From what the price did by taking the weekly low, we've had a common structure of taking the low, breaking market structure here, and then coming back to the order block origin and then taking off, which is not bad. But I don't trust it completely yet. All right. Now, the last major move that Euro USD did, which is on the weekly time frame, is this one right here. So I'm going to take it from the weekly, and then after I'll show you what I'm looking at on the H4. Now, excuse me, my line isn't straight, but I'll make it straight here. All right, so what did we have here? So on the H4, we have this bull trap manipulation bar to trap bullish liquidity. And the way we know this is because as soon as the price had an opportunity, it shot straight down with news. I guess the only thing I don't like about this is that if the price had gone into this supply order block, we would have had efficient price action because at the moment, the price did this bull trap, but it didn't return into this supply order block. And as I said with order flow, as you've heard me say before, all the blocks lay on top of each other. It's like a relay race. When one supply order block is finished, the next cycle will come in here. So I'll show you an example here. So price pushed into this supply order block, went short. When it returned, it touched back in here and went short. Not only just that, but when this new supply order block was formed over here, I'm just drop this right here. Then what we got was that price spiked into this area and then pushed short. And then we see the price dropping further down, pulling back up, but this time it didn't follow through with the pattern of returning here. So between this range and this range here, which might be a potential long if possible before another short, the price hasn't given us efficient price action. So even though we have a bull trap here, price didn't return to this supply order block. So there's an inefficiency of liquidity right here at 108, which the price might use to go to 108,900. Now, if anything, if price does continue to go long, then we should be looking to get to this area here. But we'll have to look at the dollar index to know for sure if the price is going to do that. Now I'm following the list down here. So I might even just move a few of my stuff up here because they're not even in the right order. And I'm actually going to take this into my focus mode. Now, the last time I was on YouTube, I don't think I said this, but I made a new set here on MetaTrader just that's called focus. And as you can see, it lets me focus because I've removed everything apart from the major pairs because I don't want to look at anything else because it's a distraction to me. Okay. So USD CAD is the next one. USD CAD is dropping strongly short. I did do an analysis for the live session with my students on the Wealth Group Academy. And looking at USD CAD, this was the last H1 order block that the price was holding, above this area of 136. Now, with this order block that we have here, when the price pushed for a long the first time, the same pattern happened again. So first time we had a long, brilliant. Second time we had a long, you look at this over here, barely any push long, which means that the bullish liquidity within this H1 order block was done. And you can see not too many candles after, same pattern as what we looked at with Euro USD. Prices closed beneath here. It's come for the low. And you can see from my line here that now that the price has not respected this order block as a H1 area, all we need is a return to the other side of some capacity, and then we can go for a short to fill the next liquidity point. And I'm even aiming that probably price might even just take the low of the previous week and maybe even back down here to fill the last liquidity void, which is about the same amount of pips as Euro USD going long. Right now, if the price came back here and went down here, that's 174 pips. And if I go to Euro USD, from where it is right now to that inefficiency I'm talking about, is not too much more. It's 183. So only 6 pips different. So it's actually a possibility that we might actually get a weaker dollar temporarily, and then the price will reverse the other way. Now, what can help to get that to happen sooner would be some news, but we'll check to see if there is any news. So that's USD, that's gold, which is our next look. But before I go back to gold, let me go to Euro USD, USD CAD. So I'm going to put these in line. So I'm going to leave USD CAD here. Euro USD we've looked at, pound USD we've looked at. All right, next is AD USD. AD USD, I think, is pretty interesting. And if you've heard my theory about the liquidity that the price left behind on NZD USD, where we have a major liquidity inefficiency that needs to be filled, I'm very interested in AD USD also because I think we have the same thing. Now, I remember the years I was trading back in the days when the price got here, and I really thought that AD USD was just going to break above and continue. But if you watch the price carefully, the price has got into this order block here. And even though it's holding up pretty strongly, I know sooner or later this order block is going to break. And when it does, it's going to be a major move. Now, looking at the lows, all right, I'm just going to take the candle open and closes here to explain what I'm talking about. So if I take the opens and closes over here, right here, let's just do this here. So with the open and closes that we have over here, this is the low, and the price closed beneath that low and has pushed long. And the same pattern has happened again. So we have a demand order block, price wicked into here, gave us a long. It wicked into here the second time, but you can see it's now relative, of course, this is the monthly. So when I'm saying there's a small amount of pips, there's actually a crazy amount of pips if you quote that. But the first time we had 1,600 and let's just round it to 1,632 pips. The next time round, if I get to the bottom to the top, this is 964 pips. We have another touch again, which is even less this time, which is 62. So it's kind of like a countdown. The price is letting us know on the broad scale of things that AUD/USD is about to take a tumble down. It's just a matter of when. Now, with that being said, looking at the weekly time frame, you can see this order block looks very similar to the one that we had with, now change the color so that you can see a bit better. This looks very similar to the one that we had with pound USD. And currently the price is pushing long. We don't have any reversal signature. It's just the price is pushing long because it's inside of demand liquidity. To be fair, when I'm looking at this, I'm actually taking it from the angle of the short side because the price is at, now I know that for you guys who trade the style of the main guy that we all listened to before in trading, he calls this an FVG. I call this a validation point. That was my training 6 years ago. But same kind of thing, same difference. The last major position movement or swing that we had was this weekly stop on, or this weekly induction here. Price gave us a short. If I track the price carefully, you can see that last week, the body of the candle actually closed beneath the previous weekly low. So for me, even though I know the price is pushing long right now, I'm still not 100% convinced that this is some major reversal. I think this is just a pullback before a short. Because this weekly move where it's taken not just this high, but this high and this high, a lot of liquidity, buy stops, and also stop losses have been wiped out and the price has swung the other way. So I think that really what the price is trying to do is find the next area of supply and then start pushing short. Now, my early suspicions, as I always said back in the day, that I knew that this price is, the ADUSD is going to drop is here. We have equal lows over here. So that means we have a liquidity pool that hasn't been touched since 2022. All right. Right. So now that the price has done this movement, I want to go to the D1. And on the D1, what I'm going to do is take a look at what the price is doing. So at the moment, from this drop, it would be great if the price came all the way back up here. Now, if we count the number of pips, if it's the same amount as the others, then I think we have a theme that's going on here. All right, so not as many. This is 124 pips, and right at the edge is 110. All right, but we've got two supply zones to look at. We have this one here, which is what I would call an intermediate supply order block. And we have this one, which I would call a principal one, because this is the supply order block that was formed when the price did this weekly reversal. So if the price goes back in here, then we have a great room for short movements. And to be fair, because there's a liquidity void too, and looking at this, judging by the structure, it would be great if the price just gets really back into here. I'm in the short. Okay. Now, the way we're going to judge this, the easiest way to do it is just wait to see what the price is going to do when it gets to this high. Just the same way with pound USD right now, we're waiting to see what the price does with the high, how it interacts. Same thing over here. We might be able to get an entry maybe tomorrow to go for a long and continue if the dollar index is in the same vein. All right, so the last ones is USD JPY and USD CHF. So I'm going to grab USD CHF here. To me, USD CHF has had a very good recovery. As I said, that I do think that the dollar is going to really take a very bad hit one day. It's kind of like the charts are prophesying it, if you want to put it that way. If you've heard me speak before last year, then you remember I'm talking about this range right here. We have a very long supply to demand range, as in an accumulation range that started from 2011 and it hasn't stopped till now. The price is still within the same range. And the reason why the price hasn't made a proper clear direction for the last 10 years is because it hasn't returned to this supply order block, which means that there's a destiny for the US dollar to gain some massive strength in the near term or midterm, and then a massive short long term. And if you actually look at this on TradingView, you see that the USD CHF chart has just been a one-way street down. But this 10-year range is like the price is kind of range between these two positions here. Now, the price dipped a little bit lower, but if you consider this order block, which is where I was looking at to start with, I'll include the wick here just for the sake of shaping the price. The price has really been between two ranges. This was kind of like the bottom range. The price has kind of gone back in here, and this is the top range around about 103. Currently, though, with where the price went to, it went down to an interesting place, which on some charts it looks pretty weird, but I'm just going to draw it out. I'm going to ignore the supply zone body that's kind of broken out of here, but just taking a look at the body of the candle from this demand zone, the last red candle here, the price dropped into this area and started to make its way back long again. We've had several weeks of just bullish action. Now, if we want to know if USD CHF is actually going to push along, we're going to have to wait to see what happens here. This supply order block, I know it's a little bit small, I'll zoom in. This supply order block is kind of like a security guard against the price going above this area here, 94. If it did do that, then we have equal highs at 101 that need to be taken, and several other highs over here. If that happens, then we should be seeing a price push along. Now, I'm going to go to the weekly to see what we have. So in the weekly, the price action, I think, is pretty clear. We have a weekly supply flip zone over here. And then the price gave us this movement over here. So weekly stop on over here. Let's go. And then over here, we have another one where the price has closed above this weekly supply zone here. And once that happened, the price has broken up for a long. As the prices entered into this kind of supply area, we had a little movement here that the prices kind of pushed back short and then still ended the week. And this is interesting here. The open and close price for this whole week, the gap between the two of them is only 20 pips. So that lets you know that there's a lot of bullish pressure going on, because the open is, even though the price pushed low, we still had a very good comeback, and we have a very small gap between the open and close. Now, the way the price has opened this week is not really anything spectacular. And for me, I wouldn't trade something like this because this doesn't really look so appetizing. But even though the price pushed down short, you can see that there's this accumulation and there's this demand zone here that price is kind of just hovering around. So for me, I still think that the dollar is going to gain some more strength again. We'll just have to wait and see how it plays out. Now, I don't think USD CHF is my favorite chart. I think it looks pretty scruffy. So I probably won't trade this, but it's just for the sake of those of you who do. Now, USD CHF has its times, don't get it wrong. Sometimes it's a bad boy pair. It just depends on the situation, right? Now, finally, with the USD JPY chart here. Now, USD JPY has clearly closed above the year 2023 and 2022's high. On the weekly is a more apparent because we actually have body closes. On the monthly, it's still, there's still some days before the month closes. But I'm very assured that the price is going to close above here. Now, I drew this earlier on. We have this supply order block, which was the same pattern again. I think you guys are seeing the picture here. So price gave us a short here the first time, 2023. The price came back here again in February. It gave us a good short here in March. Then price closed straight above him. So you see the first leg was a very strong long. Second one was a relatively weaker, a much weaker short. Sorry, not a long, a much weaker short than the first short. And then price closed above here. We had this small trigger here and bam, the price pushed long. Now my thing is that I'm considering the fact that if the price closes above here on the monthly, it may come back one more time and then go for a long, but it doesn't actually have to do this. This is just an assumption. Now, if you're a MetaTrader person, then when you look at the charts, it looks as though the price is in new territory. We've never been at this price before. But if you go to TradingView, which I'll do for USD JPY later on, the price has actually been here before. Okay. I looked at the chart from, I think, 1967. And from 1967, the price was at 360 yen for $1. So hopefully we'll see some big long movements again, because it's definitely going to be a strong long. It's just about getting in. I think right now USD JPY looks a bit like Bitcoin. It's just going in one direction. So hopefully we'll be able to flesh out something very soon. And of course, I'm going through these. I want to spend my time with you guys today because I haven't done a live for a while. So I'll probably be on for another few minutes. But this is my USD JPY outlook. Now you're probably wondering, you're going through all these pairs, which one is your favorite? Right now, my favorite is gold. I'm being very real myself. Gold is my absolute favorite. The reason why I like gold, I'm being real with myself, is that we have this liquidity gap yet that is still yet to be filled. And my thing is very simple. The moment that I see that the dollar index is going to do a certain movement that I'm about to show you, I'm just going to be looking to take as many shorts on gold as I can, because I think it's going to be a very big drop that will happen soon in the near future. So with gold being in mind, the algorithm that I've built, I've modified it so that it can scalp. Now, I wrote the scalping code last year, but I've been testing it out and it had good results for me. I think gold has been a great one to scalp, to swing, to everything really. So I'm really looking out for what we can get in the future when it comes to trading gold. But for now, from an analysis point of view, we have lots of gaps on gold. And because the price has never been here before, I always say we can't really do much to the left analysis. We can only do it relative to the time frame that you're on, where there is something to the left. So right now, the highest price we have on gold is 24. Let me see. It's 24.31. Price has given us a short so far. And it's just interesting to see how it's done it. So we had a bull trap manipulation bar here to trap bullish liquidity. And then the week started out with a short. My thing is that I'm still suspicious that the price will continue long, because we have another one of these order blocks here, demand one. Price broke beneath, returned to the other side. I'm still thinking that the price would like to definitely go short. Now, because of the way gold is, we're going to have to take it in our stride. Maybe a daily movement might be enough to trigger the price, maybe a weekly one and some news. I think that because this year is the election year, I think that gold is definitely lining up to have some crazy movements happen very soon. So I'm just watching carefully to see what we get. For now, I'm not going to really try to force it too much and try and take a trade on gold. Maybe you might be able to get a scalp, like an intro, like a session scalp. If using a H4 or H1, you might be able to capture something, but I'm not going to force it. Okay, I do think that gold will probably come back up here because I'm seeing these equal highs. I don't think gold will leave those alone, but it's just really a waiting game. And interestingly, here on my chart, the market opened with this liquidity gap here. I'm interested to see if it's going to fit it. That would be a good, interesting thing to see. Now I've kind of laid out what I'm looking at, guys. What I'm going to do is quickly do NZD/USD before I go, because I don't want to leave that out. And then we're going to look at the news and look at the dollar index. NZD/USD is showing bigger signs of weakness than other pairs. If I go to the monthly, I may explain what I was talking about before. So I'm just going to make this a little bit smaller. So take a look at this order block, guys. So during lockdown, all right, we had a major, short that happened. ADUSD used it to fill out, or the market makers used it to fill out a very long-standing inefficiency that it had. But NZD-USD was not so lucky. So for the New Zealand dollar, we have this swing low here, which is the crash that happened. There's the bottom of the crash of 2008. When the price got here, it didn't actually return to the demand zone before doing this massive long. So this long here is, of course, artificial, and it needs to be rectified. And the market, one thing, no matter how long it takes, the market will find a way to rectify it. Now, looking at NZD-USD, you can see the same pattern of prices going short, and then now when it comes back to the order block, this time it does a big short that is very similar to the first, which means bearish pressure. And my suspicion is that, or what I suspect to happen, is that the price is going to come into this low and fill this inefficiency that we have here. I'm expecting NZD-USD to have some sort of news or something that's going to cause the price to push strongly short. And opposed to AUD-USD, which most of the time they look very similar, they do look different here. The only thing that is similar is that they both have a weekly movement here that pushed the price short, and they have an order block. But in the case of NZD-USD, the order block that AUD-USD has, I'll just show you really quickly over here. So the order block I'm talking about is this area here on the weekly. They have the same order block. AUD-USD has managed to hold its one and not break down, but the same weekly order block, NZD-USD has already broken beneath it. So as a short, I'm just expecting the price to come back down and continue going short. Now, I know it didn't enter into the supply order block, but the wick of the candle did go to this pink line, which is a demand area here, which can be classed as a supply zone now because prices flip the direction right here. So H4, same similar pattern. If the price does go long, it would be to kind of get back to this area and find liquidity, and then we'll go in short. So I do think that we're soon going to see this movement. This is one of those years where, because there's very high impact news around the dollar, which is going to be the election time, anything can happen. It's going to be a crazy day. I already know it. So in the meantime, though, I want to see what we get with the rest of the pairs that come along. But I want to spend some time quickly to look at the dollar index with you guys. So I'm going to do this. I'll give you guys a few minutes. I'm going to do this and then go on to where we are. So I'm going to share my screen with you guys and show you what I've got going on here. All right, so here's my trading view, guys. Now, I deleted all my cookies, unfortunately. So that means it wiped away all of my markings that I had. So I'm going to have to do it again. Now, I had a little bit of markings here, but I'm just going to have to go from the beginning again. Now, this is why I like trading major pairs, because we get that extra confluence that we wouldn't get with other pairs so straightforward and easy. Not saying you can't, but you just won't. Now, if you remember me talking about this weekly supply order block from 2022, this weekly supply order block is holding the price from pushing long. I do think the dollar is going to have one more round of a long, maybe just to get back up to, some old areas before pushing long. I do think there's that artificial long coming. My suspicion is that the price may get back to maybe above this high 121, or if anything, it might even go back to a historic high like around 150. Just this last artificial long, if possible. I guess it will probably be something to do with the elections and whatnot. But let me explain where my mind is at anyway. So on the weekly, this is a supply order block. Same pattern again. So price push short, we got down here. Price push short again, but this time it got down here. So the first leg that we've had is not as long as the second leg. Whenever you see that sign, it means that the side of liquidity that was being pushed is starting to weaken from that order block. So supply liquidity, the selling pressure is starting to lift off or lighten, I should say. Now that prices got here a third time, not really much has happened. We didn't have a strong reaction like we had over here where this candle kind of burst down short. We had a touch in here in the candle after this kind of pushing short. We don't really have anything strong yet. But the moment the body of the candle, which is what I was talking about with gold, the moment the body of any weekly candle closes cleanly above this area, then we're definitely going for a long, at least to 114 where these equal highs are. That means that gold will be pushing down short pretty dramatically. Now, I hope it happens before the election because it'll be nice to be in there before it. No matter what, though, this is what I'm kind of looking at. So if price decides to go back down for a short, On the weekly time frame, there's this demand order block here. Price may decide to go back in here and launch, get some demand liquidity to launch for another long, potentially. On the daily time frame, looking at what we've got right now, I'm just going to put the daily areas on. We have a supply zone that has been used to supply short liquidity or selling liquidity for quite a while. Delete this here. Don't need it now. For quite a while. So this is the area. If you look at the price, we had a very strong set of shorts from November 2023 all the way down to December. And it's only recently that in April, price was able to get back above here. And since it's closed above and returned to the other side, price may not drop beneath here. Even though I know I'm saying that the price can get here, it might not do that because there's enough liquidity looking at the price to continue just going long. Now, the key thing here is that I had to learn this the hard way, that not every liquidity void is going to be filled immediately. Okay, just because the price left the liquidity void doesn't mean it's going to fill it. Okay, same as liquidity gaps. If you look at this one here from November, we have a liquidity gap here that hasn't been filled for close to a year now. But it's still, the price is still operating fine, it's still going short. This gap hasn't been filled. But of course, now we're getting close to this area. I'm excited that the price may use this gap, fill out the gap with the daily time frame, and then off we go for a massive dollar long before a short. So looking at this, I'm going to have to wait and see what the price does. The only thing I can say is if the body of the candle closes beneath this low here, there is a chance the price might drop a little bit lower and get down here. We'll have to just see what the price does. Okay, but there are lots of different areas between this range. So from here, 105 to 104, where the price could end up at before giving us a long. It might even do a little bit of a bigger short, which is just observing here. Let me just take this out. This supply, or demand order block, excuse me, the wick of the candle didn't return here. So we have a bit of inefficiency of price action. So the market might even decide to do a quick 103 and then push low. We'll see. There's lots of different ways the price can do this. So trying to force yourself into a trade right now wouldn't be a good idea. I'd rather wait till tomorrow and see what the price might do. But the last thing I will do though, I'm going to go to a good old FX Street over here. I'll leave this site as we are. And what I'll do is let's just take a look at the news really quickly, see where we are. So this is this week. All right. So here you go. So Monday, we've had no high impact news on the dollar, just President Lagarde's speech. Probably she's still talking now. For Tuesday, sorry, Monday was already gone. Tuesday, I mean today, sorry. We had a high impact news on the S&P Global Manufacturing for the dollar and no other high impact news. Wednesday, we have Australian news. Nothing else is high impact. Thursday, the GDP for the US dollar, which might cause some reaction for sure. Maybe it might be weak, it might be strong, we don't know for sure. And then we have Bank of Japan's interest rate decision. So the JPY pairs will be jumping. Now, the only thing I hate about the Japanese interest rate news is that there's never a time on it. It just says NA all the time. I actually don't know what time it ever is. You just wake up and the Japanese yen's done like 400 pips. Don't know when it is. Then we have another set of US news, which is this core personal consumption expenditures price index, which is important because it helps to go along with understanding inflation. But this week, there isn't that much high impact news, or there is, but it's not the highest level of high impact news. That makes sense. So we'll just have to see from price action what this week does. If there are some setups, we take it. If not, we don't. All right. But I'm back now, guys. I'll be live every day as I should, and catch you guys.